If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today is June 1st, 2020. And today is Monday morning. So looking at the highlights of the day, commodities sustained rally with momentum on the upside. But first, let's take a look at the economic events of the day. So really just one event coming out from the United States at 4 o'clock South African time. ISM manufacturing PMI number coming out. It is an important number. And this week we will have a bunch of numbers coming out both internationally and the US. But the most important number of the week is the NFP coming out this Friday. But first, looking at the markets, we're watching the US dollar actually trade weaker across the board versus the euro, the GBP, the Aussie dollar. And this may be a beginning of a rotational move. Now, we're looking at the indices, the Dow Jones steady. But the question is, did it capitulate at these levels? Okay, especially since there's tremendous unrest, civil unrest in the United States right now, tremendous rioting across the country. That may add some pressure onto the market. Now, looking at the commodities, gold rallies to resistance at 1740, while oil trades higher, okay, trading above that $35 range. That's an important threshold there. Now, lastly, looking at the stocks on Friday's momentum, we had a little bit of a rotation. Okay, tech stocks were strong and bank stocks were weak. So we're seeing a little bit of a rotation in the markets. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look at the Euro USD at a 4-hour chart. You can see this nice little blast above our resistance of 109.97. We even used it as a support level subsequently, and we're trading at 111. Now, we haven't been in these areas for quite some time. So let's take a look at the daily chart to give us some perspective here. Okay, so, we had a roller coaster of a ride towards the beginning of end of February, beginning of March. And so we're really back at January levels, okay, since before the coronavirus hit the pandemic of the world. So we're really just making that final correction up to this area. Now, I do expect a little bit of resistance-ish area around this 111.50-ish level to 111.80-ish level. So if we do see a little bit of some turbulence around this area, should be kind of normal. Now, when we look at the other currencies versus the dollar, we see the same thing. Now, this is the GBP, okay? GBP versus the USD. I would have expected this to be somewhere in the 24.63. Now, this may still play catch up, but for right now, we're having a little bit of a resistance-ish area here. Now, looking at the Aussie dollar, it did push higher to 67.52-ish level, 25-ish level, excuse me. And this is also pre-January time, okay? So it looks like we've come full circle with our V formation between when the debacle hit the markets, when the pandemic started becoming really across the world, and now we're kind of, made the correction and everything is behind us. What has not come back is the Dow Jones, okay? But we'll jump to that in just a second. Looking at gold right here, we're trading at 1741. Remember, this is a resistance-ish area, so if it doesn't break apart, and doesn't break above it, I would expect it to retrace here at these areas. However, if it does break with some momentum, that could become kind of interesting as we check out our new resistance-ish area at 1764, which was the next one up. So just keep this on the radar later today. Now, looking at oil, we've made somewhat of a comeback. Okay, we're looking at a 4-hour chart. So we're above the $35 just barely here. Okay, we hit a resistance of 35.70-ish level and we're retracing. So keep this in mind. 34.47 is a support-ish area as we continue into today's trading session. And as the lockdowns are easing, finally catching up to South Africa, from what I understand, today is the first lifting of restrictions in South Africa. So it should be kind of interesting to see how everybody just kind of absorbs this lack of restrictions, and will we be going back into somewhat of a lockdown? That's something to consider as we continue trading throughout the week. Now, looking at the Dow Jones, this is really something, and what we haven't seen here is a full recovery from January levels. Now, January levels, we were trading at all-time highs at 29,400-ish level, making that upper high there, and then finally making this debacle. So this is relatively weak compared to the other currencies that have recovered versus the dollar. So suffice it to say, we're still below our 200 point moving average, which is really an important level for us as well. So right now we're trading at 25,368. It should be kind of interesting what the NFP number comes out on Friday. So I don't want to celebrate anything too soon. And technically we are in summer trading environment, which is lighter volume. So I don't want to get too aggressive going into today. I would look at the tech stocks, especially Cisco, to see if it does have some follow through. Now, what am I talking about? Now, Cisco Systems is one of the largest network companies in the US. Now, it pushed higher on Friday on tremendous earnings, and this is not a small stock. This is really a bellwether. This is really as important as Facebook and Apple and Netflix to the network community. Okay, so this is really a major bellwether. And so once it's making this recovery, maybe we'll see the markets actually play catch up to it. Okay, now this is a NASDAQ stock, so we may see the NASDAQ actually create that and not the Dow Jones. Remember, the Dow Jones reflects all the traditional type of businesses, and the NASDAQ represents the high-tech stocks. Where we're looking at the high-tech stocks, we're seeing tremendous strength. Apple still on its highs. Amazon still near its highs. Microsoft still on its highs. Facebook close enough to its all-time highs, okay, which we just hit a couple of weeks ago. Looking at the NASDAQ also, we're close to our all-time highs, okay? We're closing on that, okay? Whereas the Dow Jones is a little bit weaker. So we see that shift in the market where the Dow is a little bit weaker, and we may play catch-up to the rest of the market just because we're seeing some strength in the tech sector, okay? So something to consider going into today's trading and into this week. This is Fred Razak. I want to wish you guys a great trading day. Thank you.